Hello and welcome to Prime Investor, where we research and you profit. This is the 7th edition of our Prime Q&A series, where we answer our subscribers' queries. My name is Gaurav Menon, and today we have with us our co-founder, Vidya Bala. Hello, Vidya.
Hi, Gaurav.
So the first question today is, where do I park the cash component of my portfolio? This is the capital that I intend to use during market crashes or any other market-linked opportunity.
Great. I think it's a good idea to hold cash, some cash in the sidelines to, look at opportune moments to invest in when there is a crash or where you believe there is an opportunity coming up. When you do that, the primary thing to kind of keep in mind is that this is not the money that's going to earn you the maximum returns. So it's best not to look at the high returning opportunities to park this money. It's essentially to kind of preserve your capital and earn some interest, so that some returns, so that you are available, you're making this money available, making it liquid for you to invest in, right? So that should be your primary objective. In that case, you have a few options. One, and the easiest, is to park the money, continue to park the money in your savings account. In some cases where you have a sweep option in your savings to your FD, you can even use those if they're large sums, so that they earn a little more than your savings account. But this is the easiest when you don't know where you're going to invest next, right? For example, you might be an investor who wants to put some money in stocks that you're watching, and when the stock corrects, you might want to put the money there. Or you might want to put it in your equity mutual fund. So when you're not clear where you're going to deploy that money, the best is for it to stay in your savings account, and possibly with a sweep option if there is one available. The second option, if you've already earmarked some funds, some mutual funds in which you will average when the market falls, in that case, it makes sense to put your money in liquid or overnight funds from the same fund house into which you plan to invest in the equity funds, right? For example, if you say have something like a Mire large cap as an identified fund which you will invest in market falls, then you might want to keep it in Mire liquid and do a quick STP, because that's easier to do that kind of a transfer. But otherwise, you might want to simply put the money in an overnight or liquid fund. But the only thing is that it may not be immediately available if you need to take the money out and then reinvest it in some other fund, right? It might be T1, T+1, T+2 before you get the money. So that might cause a bit of delay, especially when you're eyeing, certain levels in the market, right? So the third is not a very optimal solution. I would suggest go with the first if you don't know, that is, keep your money in your savings account if you don't know where your investment opportunity is going to be. If you already know and you've earmarked certain funds to invest in stocks, go with the liquid funds from the same fund house. Yeah.
Thank you, ma'am. Now the second question for today. What are your views on NFOs which are focusing on sector rotation? For example, the ICICI Business Cycle Fund.
Right. So it is, a kind of a known fact that almost every sector goes through cycles, right? You have capital and engineering goods or infrastructure, which do well when the government spends a lot on capex. And then you have banking, which does very well in a low interest scenario where it can lend a lot and people borrow and spend a lot more, right? So our companies are doing new investments and therefore borrow. So these cycles will always be there. And we think that it is every fund manager's job to identify these cycles and ride them at the right time, right? So as long as you are a diversified fund, be it a large cap fund or a multi-cap or a flexi cap or a mid cap, your primary job will be to identify such opportunities. And that's pretty much what most fund managers do. But when you give a label to this, and you are very in a very focused manner doing this, then it becomes a kind of a theme, and it comes with in a new form as an NFO, right? So at Prime Investor, we would not attach too much importance to such themes where they are primarily strategies that many fund houses, without naming it so, follow, right? So you would have most fund managers looking for such opportunities. So I would say you don't have to ride one with a new fund tag in it. So just go ahead and look for good quality funds, which essentially have done well because they have followed this.
Thank you, ma'am. Now, the final question for the day. What does it mean when you have a hold call on a fund? What should I do if I have SIPs in that fund?
Right. So this is a question many of the subscribers who are new to our platform, have. Because at PrimeInvestor, we have this unique concept where we not just rate funds, we give recommendations on funds, whether a fund is a buy or a hold or a sell. Some can be unrated, right? So a buy is a very clear call and sell is a very clear call. When it comes to a hold, it's not a clear call because we ourselves at that point know that a fund has dipped in performance, but it has not gone so worse that it warrants an exit from your portfolio, right? At the same time, we don't want you to have any opportunity loss on those funds, right? You continue to hold them and it continues to drag your portfolio. So to avoid those kind of scenarios where a fund is dipping in performance and such a dip may be temporary, we try to put a hold, just say, hey, stop this for now. Let's watch the performance. We'll come back to it if we think it improves, or we'll give a clear sell call if it deteriorates further. So that way we are reducing further impact on your portfolio, and we are ensuring that you get into newer opportunities instead of pursuing an opportunity where it is more uncertain at this point in time. Therefore, if you're making fresh investments, SIPs especially, we usually our hold suggests that you stop SIP. Right? Don't put in fresh money in this fund. Hold on to what you have. Whether you have done SIP so far or you put a lump sum, whatever has been invested, just hold on to it. And we will let you know if there is any cause for further worry and whether an exit is needed. But there are better opportunities at this point. So start SIPs in a different fund. And we usually, suggest what you should be doing and where you should be going within our prime funds list to start a new SIP, etc. So in short, a hold means, hold your existing investments, stop fresh SIPs, move to another performing fund. It might even be part of your own portfolio to start fresh SIPs. So that's the call with hold.
Thank you, ma'am. Now, that's all for today, folks. We hope you've enjoyed this video. If you did, click that like button. Also, if you have a question that you'd like us to answer, let us know in the comments and we will get back to you on that. Bye for now and see you next week.